Out of these three, which strategy gave you the most profit?
Around 6% was given by the small cap indices.
5%, 6%. These are really wild numbers.
आपको बस ये सोचना है कि जब प्रॉफिट करो तब बड़ा करो, जब लॉस करो तब छोटा करो, and still you will end up making money.
So now let's get into the juicy part. Imagine a MACD strategy which is simple, rule-based, and has delivered over 6% returns for the last 25 years, that too in Indian markets. And there is a high probability that you might have tried it, but it didn't work well for you. So don't worry, you are not alone. Welcome to the Share Market channel, and I am Om, and we have got a person who lives and breathes data and trading system. Welcome Nishchal Jain from our research team.
Hi Om, hi everyone. MACD has been around here for decades and people are using it. Might be they are using it the right way or the wrong way. But we are here to prove it and show it using data, whatever we have, and the hard classical way of showing everything it's fine or not.
Wow, Nishchal, that's really great. So for the viewers who are listening about MACD for the first time, can you just explain it to them? What is MACD really?
Sure, Om. MACD stands for Moving Average Convergence and Divergence. It is a momentum based indicator. It usually comprises of two things. One is the MACD line and the second part is the signal line. MACD line is the difference between two exponential moving averages, generally a short term and a long term. For our research purpose, we have used here 12 and 26, which is the classical standard way. The signal line is the 9 days exponential moving average of the MACD line itself.
So which strategies have you used to test MACD?
We have used the two commonly used strategies which are present in the market. One is the signal line cross and another is the zero line cross. So for signal line cross, we mean that the MACD line crosses the signal line from below. That signals it's bullish in nature, and whenever it flips, we sell it. For the zero line cross, we are using the zero line as a standard, and whenever the MACD line crosses the zero line, we'll buy it, and whenever it flips, we'll sell it.
So now let's get into the juicy part. So how did you test the MACD?
So Om, we have used here three ways of testing MACD. One is the long only strategy, second is the short only strategy, and third is the combined strategy. To explain you, I'll tell you that in long only strategy, we first entered into the long side of trades. So what we did is that whenever a signal cross or the zero line cross is happening, we'll enter into the trade, we'll buy that stock, and then we'll sell it whenever the signal flips. That's the buy side, long side of things. For short side of things, we'll first enter into a short trade. So we'll sell first and then we'll buy. And in combined strategy, we are just flipping around. Long, short, long, we just keep going around. So the money is never left idle whenever you are doing a combined strategy.
You are using long strategy, short strategy, and combined strategy. So out of these three, which strategy gave you the most profit?
See, clearly while testing with data, we see that the expected average value of long only strategy was very good. So you can see that around 6% was given by the small cap indices, and around 4-5% was given by the broader indices. We have used 5 indices over here for your reference to test. So they are basically Nifty 50, Next 50, Mid Cap 150, Small Cap 250, and Nifty 500. The long only strategy gave significant good results in all the 5 indices.
5%, 6%. These are really wild numbers. And also I want to know, what do you mean by expected returns?
So what I mean by expected return is that it is the average win percentage multiplied by total winning trades plus the average loss percentage multiplied by total losing trades divided by total number of trades. Complex लग रहा होगा, simple में समझाते हैं. तो it's like कि मान लो कि आपने 50 ट्रेड किया, ठीक है, यू मेड प्रॉफिट इन 10 ट्रेड्स, यू मेड लॉस इन 40 ट्रेड्स. यू माइट बी थिंकिंग कि यार 40 ट्रेड में लॉस हुआ है, 10 में ही प्रॉफिट हुआ है, यू विल एंड अप लूजिंग, राइट? बट इट्स नॉट द केस ऑलवेज. सपोज 10 जो आपका विनिंग ट्रेड्स है, यू विन 5% एवरेज ऑन ईच ट्रेड, और जो 40 आपका लूजिंग ट्रेड है, यू लूज जस्ट 1%. तो व्हाट इज योर नेट एक्सपेक्टेड रिटर्न? इट विल बी 10 into 5 विच इज 50% and 40 into 1 which is -40. तो 10% आप अभी भी गेन कर रहे हो, डिवाइडेड बाई टोटल इज 50. तो बेसिकली आपका एक्सपेक्टेड रिटर्न विल बी 0.2% विच इज पॉजिटिव. तो ज़रूरी नहीं है कि यू जस्ट कीप मेकिंग प्रॉफिट्स इन ऑल द ट्रेड्स. आपको बस ये सोचना है कि जब प्रॉफिट करो तब बड़ा करो, जब लॉस करो तब छोटा करो, एंड स्टिल यू विल एंड अप मेकिंग मनी. बट यू नीड टू कीप रिपीटिंग दिस. लॉन्ग टाइम के लिए सोचना.
So अभी तक we get to know कि long strategy works really well. So what about shorting?
So short side, we tested this same way that we tested this on the long side of things. So the expected value which we got on the short side of things is negative. So unless you are caught into like the 2020 crisis or the 2008 crisis, short strategies doesn't make much profit. One reason for this can be like Indian markets are structurally bullish in nature, so shorting doesn't work that well.
We have talked about long strategy and short strategy. What about the combined strategy? How did it work?
Combined strategies were good, less volatile, matlab giving an expected return from ranging between 1.5 to 2.5%. But I would still say that someone who wants to ride the wave and check the momentum, they should go with long only strategies, because short combined strategies smoothen this out, but I don't think that it's an ideal choice for anyone to go with.
So earlier you talked about two strategies which you used. One is signal line and another is zero cross line. So which strategy worked best for you?
See, ideally both strategies were good and they both performed good only in the long side of things. So while comparing the long side of things, I would say that both strategies stands out equally. But if you look at from a practical standpoint, then I think that zero line cross is slightly better than the signal line cross. The reason is like you get a less number of trades while working in zero line cross. So if you account for all charges which you might have to pay up or monitoring the systems, checking the data every day and out, I think that zero line cross will be far better than the signal line cross.
So Nishchal, this was super insightful. And if there's someone who is a new investor and is trying to use different strategies like MACD, what should be the key takeaway for them?
So for our viewers, I would say one thing, that don't rely on hype or tips which are floating around. Use tested, data backed systems like MACD. Backtest your strategy, paper trade it and trust the numbers. Just remember one thing, data doesn't lie.
So rightly said Nishchal, that data doesn't lie. So I'm just curious to know, which other indicators are you going to test next?
We are planning to test other technical indicators like RSI or Super Trend. We are also planning to test some custom based strategies which you or the viewers might like us to do work on.
So thank you very much Nishchal. This was a really insightful conversation for me as well as the viewers. And if you guys have any strategies which you want us to test, you can comment down below. And if you like this video, don't forget to hit the like button, share it with your friends, and do not forget to subscribe to this channel. Thank you for watching.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.